Good morning, everyone, and welcome to this investor briefing for Amaero International Limited. My name's Gabriella Hold. I'm from Automic Markets, and joining me today is Amaero's Chairman and CEO, Hank Holland. Good morning, Hank.
Good morning, Gabby. Thank you very much for the introduction, and good morning, everyone in Australia. Merry Christmas, Happy Hanukkah. I traveled back from the Middle East late last week and here to be with family for the holidays, and then we'll be heading back to Australia the week of January the 30th to February the 3rd. So hopefully we'll see some of you during that time, and then from there we will head back to Abu Dhabi. After the recent announcement, Gabby, if you want to pull the presentation up.
Sure. Hank, just before we get started, I'll just go through some housekeeping for the attendees. So everyone, this webinar is being recorded this morning, and a copy of the recording will be added to the Amaero website following this morning's briefing. I'll soon pass to Hank for the formal presentation. Following the presentation, we will have a Q&A session. We're running it a little bit differently this morning. We'd like to encourage live questions. So if you'd like to ask a question, if you could use the raise hand function at the bottom of the screen, I will then unmute you so you can ask your question directly to Hank. All right, I'll get the presentation up and we can get going.
Great, thank you, Gabby. We'll got a page of the disclaimers, and then we'll begin the presentation. Third page there. Great, thank you very much. So after our recent announcement pertaining to the joint venture in the Middle East, I've received a number of clarifying questions, and given our commitment to communicate with investors in a transparent, candid, and balanced manner, it seemed to make sense to have an investor briefing, and then importantly, to take live questions. I want to encourage a dialogue with our investors. As I've mentioned before, we plan to do this after each quarterly results, and also we'll plan to be in Australia quarterly as well, and look forward to doing this both in person as well as via video where necessary. My hope in the investor briefing is to cover a few topics somewhat quickly, providing some color, and then again get to the questions. But in particular, who is our JV partner? What is the scale and the scope of the opportunity as we see it? And should investors be concerned that there could be a dilutive capital raise to fund working capital and/or CapEx going forward? What we'll do is we'll go through this literally in sequence with the announcement. So the next page, please, Gabby, really addresses who is our partner. And as we announced, we have signed a binding joint venture agreement with Rabdan Industries. Rabdan is an affiliate of Etmar Holdings. And this is for not only the initial project, which is additive manufacturing and powder production in Abu Dhabi, but as we'll later talk about, it will be exclusive for other activities we anticipate in the Middle East as well. Next page there, okay, thank you. As it relates to Etmar, during the annual general meeting, I encouraged investors to go to Etmar's website to get more information. The image on the right is pulled directly from Etmar's website. Etmar is a diversified holding company, relationships that we have known directly and indirectly for a long time, very strong local knowledge, very, very deep relationships. Etmar Holdings is chaired by His Highness Sheikh Hamdan bin Mohammed bin Zayed Al Nahyan. Sheikh Hamdan is one of four sons of Sheikh Mohammed bin Zayed Al Nahyan, the ruler and president of the United Arab Emirates. Given this, as we'll talk about later, not only have they been incredibly helpful as far as local knowledge and helping us throughout the UAE, but also very importantly, I think the reason they got so excited about this project and the reason we felt it was such a good fit is what we are doing entirely aligns with the strategic priorities set forward by the UAE. These initiatives have been recently elevated a new committee has been formed called the Economic Industrialization Board, meant to advance the largest and most strategic initiatives, of which we fit in that. And that's really was Rob Dunn's purpose. It was recently created, it was newly formed, specifically to explore joint ventures and investments that align directly with these initiatives. So when I invested in May, as an investor, what I look for are big opportunities and also opportunities that are very asymmetrical. And there was 4 key parts that we looked at, essentially the premise for our investment back in May. Number one, we felt that advanced manufacturing in general was going to experience a renaissance in the US and the Western world. Number two, that we felt strongly that additive manufacturing, particularly metal additive manufacturing, metal 3D printing, was early in the adoption phase and had very strong secular growth characteristics. What prompted the interest in May of this year when we invested in Amaero initially was, given the events in the prior year in COVID, we all had a heightened awareness of its impact on the supply chain. And there already had been discussion beginning about US companies, Western European companies relocating their most critical manufacturing and the most critical materials, nearshoring, home shoring, if you will, particularly away from China and Russia. The conflict in the Ukraine exacerbated that manyfold. It has now become of national interest and a strategic imperative. And I speak now for the US and the Western countries in particular, to relocate all critical manufacturing, all critical materials to allied countries, essentially. And then finally, given the conflict in Ukraine, we've seen a step function in spending, particularly as it relates to defense spending, and likewise aerospace. You'll see in this paragraph here that we have signed exclusive partnership on additive manufacturing and metal powder production in the Middle East. And as you're aware from prior announcements and prior comments of mine, I've been in the Middle East for the better part of the last 3 months. Why the Middle East? Particularly for a company that is listed in Australia and heretofore had operations limited to Australia and the US. I'm of the belief that the US and Europe face very strong economic headwinds, given overzealous central bank policy, undisciplined fiscal policy, significant increase in debt, all of which will become a tax on our growth going forward. For different reasons, China faces significant hurdles to its growth, not the least of which is its continued challenges, COVID, and its aging population. On the other hand, the Middle East is the brightest spot in the world today, and I anticipate for the next 5 to 10 years. From an economic standpoint, it benefits from the strength of oil and gas. And given what we've seen around the world with a movement towards green energy, there's been very, very little investment in new capacity and or even maintaining existing capacity as far as oil and gas around the world. So no matter what might happen over the next 2 to 3 to 4 to 5 years, we expect we'll continue to see strong oil prices, certainly much stronger than we had 5 and 6 years ago, for a period of time. And this will benefit the Middle East economy, particularly that of the UAE and Saudi, within the UAE, Abu Dhabi in particular. On top of that, much like the US in the 50s, albeit for a different reason, the UAE and Saudi have made very ambitious investments to reposition the country, in their case, away from fossil fuels, and to better position the competitiveness of their economies. Incredibly ambitious investments are being made, which again, I think will very well position the Middle East. I think they'll likely lead the annual economic output and growth of GDP over the next 3 to 5 years. In the case of the UAE, they have a very light touch regulatory policy, pro-business. And then finally, and I think this is important, and I'll note one thing on this graph, both the UAE and Saudi have made it of national interest and again, a strategic priority to remain geopolitically neutral. Why is this important? We've seen conflict all over the world. Obviously, we've seen inherent conflict between the US and NATO countries, Russia, China, different reasons. And what you're seeing right now is all roads to some degree lead to the modern Arab world. And again, here I particularly note UAE and Saudi Arabia. The other thing I would note is if you look at this graph, which is the anticipated growth of additive manufacturing, note if you're growing at a CAGR or compounded annual growth rate of 19%, you're doubling your market a little bit over every 3 years, right? So big industrial opportunity. This is the single largest industrial growth opportunity there is from an application standpoint. But notice the graph that shows the various sectors. Within government and military, it is 6%. Now, granted, that increase will rise. That percentage will rise as we increase secular military spending. But nonetheless, one of the things that's important to UAE is that there are significant applications that are non-defense oriented and that they will continue to abide by and have a particular priority on being geopolitical neutral and these various policies. We think for that reason as well, it's a very efficient place for us to operate going forward. On the geopolitics, the next slide, and this is really difficult to fathom. So the days before the Ukraine conflict, US defense primes, it's the same with other NATO countries, US defense primes sourced 70% of their titanium from Russia. Just let that sink in for a minute. US defense primes sourced 70% of their titanium for Russia. The single most critical industrial metal that we have. And we became entirely reliant on Russia for feedstock and sourcing raw material. In fact, the largest producer in the world, titanium 64, which is the most common metal used in aerospace as well as defense applications, manufactured at VSMPO in Russia. Next slide, if you would. This is just some highlights in recent press. And I won't read all of these, but a couple. So at the bequest of the US State Department, Boeing was required to suspend buying metal, in this case, titanium, from Russia. You see the top of this. In the case of the civilian, the commercial fleet, about 1/3 of its titanium was coming from Russia. I would add they've yet to feel the real impact of this, but because of the slowdown of the MAX program, they in fact have stockpiled a fair amount of titanium when they had to suspend production of the MAX program. As they start the MAX program back out, they will quickly go through the stock they have of titanium, and this issue is going to be exacerbated. On top of that, you see another few announcements here about NATO countries that, of course, via the NATO charter, were supposed to be spending 2% of GDP on national defense. As we know, very few have. And of course, the Ukraine conflict has prompted these countries, in many cases, to materially increase their defense spending from modernization as well as a maintenance standpoint. Next slide, please. One of the things that I'll try to impress on you, and right now we've got a project in the UAE that we have to execute on. We, Amaero, need to deliver on, and I'm confident that we will. But the first is a platform. We've got a very ambitious strategy to become, and I think we can, a leading global company to partner with first-tier primes and OEMs and applied engineering, design, and commercialization. So essentially be intellectual resource, intellectual partner to these very important companies, many of whom are based in the US. At the same time, develop strong competency and expertise in powder metallurgy and material science. And finally, metal powder production. Not only titanium powder production, but other alloys that have specific applications. Copper, in the case of space exploration, aluminum. The UAE happens to be the largest aluminum producer in the world, and super alloys, many oil and gas applications, as well as desalination. That's the project that we will build in the UAE, Australian $300 million, and that will become the platform from which we look to vertically integrate the entire pre-production titanium supply chain. We will likely begin with a large melt project and titanium mill machine forge. We would expect it would also be in the Middle East, and discussions have already begun. And that in turn would be followed potentially by titanium sponge production. and potentially a mining operation for rutile, ilmenite, and other minerals used in the production of titanium. Next slide, please. We took our time and we were very thoughtful in negotiating this partnership. And I would add a few things, some of which may be obvious and perhaps some of which are not. One of the issues that we were very thoughtful to negotiate and our partners were fully supportive of was a governance structure. In order that we can comply with today, as well as anticipating our business in the future, export control issues, international trade of arms regulations, U.S. Department of Defense procurement regulations, and other such issues, it was imperative that Amaero control the governance of this entity. There will be a board comprised of 5 members. Amaero will appoint 3. Amaero will appoint the chair of the board. And other than those issues required by English corporate law statute to require shareholder approval, all authority will rest with the board, and in turn, the power it delegates to the CEO. So again, from a governance standpoint, very important given the nature of our business that Amaero will control the governance. Number 2, obviously this had to have very favorable unit economics to Amaero, as well as conveyance of strategic and valuable assets. This is a significant development for Amaero and its enterprise value going forward. This perhaps less obvious, and yet I feel self-serving. Equally important to me was that this will be a very good transaction for our partner. I have no desire to do a single transaction with this partner. This will not be our last joint venture. This will be an important project for Amaero, and it will be very accretive, I expect, our enterprise value. But it is but the initial project. I want our partners to do very well. I want this to be the beginning of a very successful partnership between us. Hand in hand with that, equally important, is that we want to align ourselves with and advance the most strategic, most critical economic industrialization initiatives in the UAE. This project does that, and we are committed to advance these initiatives any way that we can within the UAE. Next page, please. As it relates to each party, so Amaero obviously brings expertise, we bring goodwill, we bring human capital, all of which we will deploy and utilize exclusively as it relates to these operations in the Middle East, as I've described. Rabdan brings very important local knowledge and relationships. And this is one thing that perhaps it wasn't clear, at least some of the questions I received suggested maybe it wasn't clear. The venture has been negotiated such that Rabdan is committed to directly fund all capital expenditures at the project level and/or indirectly secure funding from strategic groups, i.e. economic development groups or other strategic groups in Abu Dhabi that would provide that funding on a non-participating, non-equity basis. Each SPV will be separately documented based on who the funding source is. And in turn, that SPV will allocate the economics based on the above. As an example, if you go to the next page, the project which we've outlined in Abu Dhabi is an Australian $300 million project. This will be the flagship, the platform, the foundational project from which we build the other. There's 3 most obvious ways of which we could fund the CapEx. Number 1, Rabdan directly writes a check and funds $300 million Australian, and the economics are shared 50%, 50% between Amaero and Rabdan. Another scenario, and we're in discussions right now with parties that would align with this scenario, Rabdan introduces us to parties and secures binding funding commitments. This could include organizations such as Tawazun potentially, offset providers potentially, other economic development capital, where they would provide capital in an effort to advance the economic development of their country as well as their strategic initiatives, and they would not participate in economics. Thus, they would provide the capital, Amaero would receive 50% of the economics, and Rabdan would receive 50% of the economics. A third scenario is Robdon brings in funding partners, plural, and of those partners that provide the 300 million, one or more of those partners require participation / equity. In the event that is the case, it is understood that participation equity would be reduced, would reduce Robdon's position. So for example, if a partner required 20% equity, Amaero would end up with 50%, Robdon with 30%, and the strategic partner with 20%. As it relates to working capital, the joint venture outlines that both Amaero and Robdon will contribute 50-50, that is on a pro rata basis, the working capital. One thing that I can assure you as a large investor alongside you is we are very focused on making the capital we have currently last as long as possible, delaying the need to raise further capital, to raise capital opportunistically on a going forward basis, and certainly to minimize any dilution that shareholders result in from that capital raise. And so working capital in the announcement last fall, we announced that that would be capital sufficient to take us through the middle of next year. We have a number of initiatives that we're working on right now, and I would hope and expect it would last us longer than that. We'll come back with more details. But again, we're doing a number of things right now that will extend the runway we have with the current capital on Amaero's balance sheet. And we do not expect that we would need to raise dilutive capital for CapEx for reasons that I described above, nor do we expect that there would be any significant dilution from large amounts of capital required for working capital. We have capital sufficient for a period of time. And by the time we raise capital, we think we'll be further along on a binding basis with the various projects that we're talking about now. Next page, please. As it relates to the current project that has been announced, and as I said earlier, our ambitions are much larger than this, but this is a very important project. This will become the foundational platform that we will explore other opportunities with our JV partner. As you know, we exited the equipment sales side of the business. We also do not plan to focus on bureau printing, which there too, I anticipate that business will be commoditized over time. We're going to focus on intellectual property and value add areas of the supply chain. The Applied Engineering Design and Commercialization Center, which invariably we will have staff in the UAE and the US, potentially also Australia to be determined. But the idea is that we want to be a trusted and essential intellectual partner to first-tier primes and OEMs. Likewise, on the large format 3D printing, much of this will simply enable the development work we're doing with the first-tier primes and OEMs. If they have in-country content requirements, such as Australia, then it may well be we stand up production on a project by project basis, but it will not be the thrust of the company going forward. And then finally, large-scale metal powder production, powder metallurgy, material science, metal powder production will absolutely be a cornerstone of Amaero going forward, as well as the Falcon joint venture. The project that we have announced will be 4 dedicated titanium inert gas atomizers, the same atomizer that was produced for Australia, so ×4, and then 3 other atomizers that will be dedicated to the use of aluminum alloys, copper alloys, and super alloys, which, as I mentioned before, have some very interesting non-defense applications. To the extent you're interested in the question and answer, we have not disclosed the economics of this project, but happy to talk about as an investor how you might think of that. Next page, please. And then finally, the last page. One of the things that I can assure you is 2 things. A, we have gotten very, very strong support in the UAE. That support has come from senior leadership, Tuasan Economic Council, Tuasan Special Projects, Abu Dhabi Investment Office, and others. At the very same time, these are complicated transactions with lots of parties involved. We have made it known that it is imperative that we move quickly. We have an atomizer that has been finished, It needs to be shipped as soon as possible to be installed, commissioned, and put in production. And I lay in bed at night worrying about a lot of things, not the least of which is the various things that go wrong and or delay this project. I have the utmost confidence and trust in our partners. At the very same time, we will do everything we need to do to parallel path, plan Bs, plan Cs, whatever the case is, until we have final sign off. And we have the atomizer on the water being shipped to UE, ready to be installed. So rest assured that albeit we feel good about this project, we cannot rest on our laurels. We cannot take for granted that this will happen. Every reason to believe that it will, but we will continue to pursue alternatives that are in the best interest of Amaero as well as Falcon until this is done. With that, I look forward to taking your questions and likewise hope to see many of you in January in Australia. Gabby?
Yeah, thanks, Hank. The first question is from Howard Broadbent. Howard, please go ahead.
Yeah, hello, Hank.
Hello, Howard.
Mate, my question is, as a small investor who's just come on board with the Amaero company very recently, I'm still looking into, the research factor and keeping up with information like you've given us today so that I become a little bit more knowledgeable about what the company's doing. So directly the question is the Australian Stock Exchange the only place where Amaero shares are listed at the moment? And with a view to what you've been speaking to, the company shifting its focus into the UAE and eventually doubling back to customers in the USA, would there be plans for the future over the next few years to list the company elsewhere other than the ASX?
Yeah, thanks, Howard. Notwithstanding the fact that you're a recent investor, it's a very insightful question. We are only currently listed on ASX, to the first point of your question. And moreover, I think ASX is the right place for the company to be listed today and for the foreseeable future. If you think about the ambitions that we have, simply the first project that I described, the Australian $300 million project in the UAE, the nature of the conveyance of the assets associated with that, as well as the earning power of that project, one would expect would materially increase the enterprise value of this company. I do believe that today, given that we are a small company, given that albeit the trading volume has been higher recently, I think to successfully trade more successfully trade in Australia with institutional investors, I'll want to continue to grow the liquidity of the stock and the trading volume of the stock. And that'll be predicate, candidly, on building better investor relationships. So investors such as you do better understand our strategy going forward. And then very importantly, we execute, which candidly the company's done a poor job of in the past. And so it's incumbent on us to do that. If we're then successful with that project and we're successful with a broader ambition, I think it is very much the case this company could trade successfully on other exchanges, including the largest, most important exchanges in the US, and potentially dual list in Abu Dhabi or somewhere in the Middle East. When is that? I don't know. I certainly would not expect it as calendar year 23. And I would say it's predicate upon a quote unquote, a nice problem to have, and that we will have been a much more successful company on the ASX with a much larger market cap and much better liquidity. Because until then, we would not consider listing on another exchange. Hopefully that answers your question.
Yes, thanks very much, Hank.
Thanks, Howard.
Okay, Hank. The next question comes from Finola Burke of RAS Research. Go ahead, Finola. Okay. Finola, are you there? All right, we might come back to Finola because I can't hear her. The next question is from Sam Crompton of Shaw and Partners. Go ahead, Sam.
Yeah, hi Hank.
Hey, Sam. Hope
Sorry,
you and the
hi,
colleagues
Hank.
are well.
Just wondering if you could please expand on key timelines and milestones that need to be met with this Middle Eastern transaction, and if any regulatory approvals are required.
Yeah, good question. Let me start with the latter. The most immediate regulatory approval will be export control license, essentially to ship the atomizer from Germany to the UAE. Currently, we have an export license to ship the atomizer from Europe to Australia, to Amaero. And one of the reasons it was very critical to get the binding joint venture agreement signed was so that we can initiate a new application to instead send the atomizer to the new joint venture as opposed to Amaero in Abu Dhabi as opposed to Australia. That application will be submitted by the manufacturer, and we expect that it will be submitted shortly. It is about a 90-day process. And so from that standpoint, it could not be on the water until, let's say, the end of the first quarter. Number one. Number two, milestones on the JV. It is critically important we get a facility identified so we can land the atomizer, continue our testing, begin some very important training, certify the facility, and begin the qualification of the powder with the first tier primes and the OEMs. On that basis, we have said to our partners in the UAE, we certainly expect this project to be final green lighted during Q3 fiscal year or Q1 calendar year. We actually, though, would like to make a decision by the end of January on the atomizer. And so if the larger project is still going through the final approvals, whether it's with the funders or others, what we may well do is stand up a temporary facility. It wouldn't be temporary, but it'd be what I would call a testing, training, and demonstration facility. So we go ahead and get the first atomizer installed, and then go ahead and place orders for the other equipment, which would be 6 other atomizers plus the AIM equipment. There's going to be a lead time on that. So it'd be less critical as far as the other facility, but we're thinking in parallel paths. But I would expect the first quarter will be critical to get the final approvals to greenlight this project, and hopefully sooner to greenlight the entire project or potentially a facility to land the atomizer.
Brilliant.
Okay,
Thanks a
thank
lot.
Your question?
All right. Next question, Hank, is from Phil Kaywood of PAC Partners. Phil, go ahead.
Hi, Hank.
Hey, Phil.
First of all, congratulations again on moving with such speed to deliver this joint venture. Well done to you and the board. It's got to be very well congratulated for that.
Thank you.
Hank, just my question is around, I think a lot of investors have this same query. If we look at Rabdan as your joint venture partner, but also to a degree your financial partner or banker, if you like, to provide the capital, is there any sort of sunset clauses you have in that arrangement where they must deliver a financial solution for you? I know you just mentioned there you want to make a decision by the end of January, re the atomizer, but if I don't know, putting our bearish hat on and Rabdan can't deliver the capital by a certain time period, can you substitute in a new financial partner there? And how confident, and just talking us through where you think you will get to a financial commitment from Rabdan and their partners?
Yeah, I mean, in many ways, Phil, it's the most important question. And let me give you a sense of the way I think about it. First of all, to your direct question about the agreement, absolutely. I hope and expect that we'll be a partner with Rabdan for a long time. And at the very same time, they understand that time is of the essence. And so essentially, we as controlling governance control when we call capital on the CapEx side and or the working capital side. We've established within the timelines we expect to do so. And there's essentially dilution provisions in the event they can't perform. And so, yes, we could substitute other partners over time, and we would have the freedom and the latitude to do that if they were unable to perform. Again, it's not my expectation that'll be the case, but we certainly have that latitude. As far as plan B, how do I think of it? There are other scenarios within UAE, and I continue to think the UAE is the right place for us to be. There are a number of economic development agencies, one in particular, Abu Dhabi Investment Office, ADIO, who we've had extensive conversations. ADIO has a program, for example, to encourage economic development, that they will rebate 1/2 of all your capital expense associated with equipment. Well, the entire 300 million is equipment, and they take no equity. So worst case scenario in that, if you go back to a more traditional economic development, as opposed to having a financial partner, and this is what we're looking at before we met Rabdan, you would bring in someone such as that would essentially give you a large grant. And then you would marry that with capital from something such as the Emirates Development Bank, that would give you very favorable terms and relatively high leverage. And then the company in that scenario would own 100% of the project, not 50% of the project, but then would probably be required to put in 10 or 15% equity as opposed to 0% equity. So there's a host of other ways we could go at. We've also been contacted quite actively by some other partners in the Middle East, and all of whom I've said we fully anticipate that we will proceed with Rabdan. We think we've got a really, really good partner. Every reason to believe that that will proceed. So we're not engaging in any material discussions, but rest assured there is significant interest given the strategic nature of this project. And we will not be talking about this 6 or 9 or 12 months from now. We will go another direction if we have to. And, that has been communicated clearly to our partners, and they understand that. And they in turn have communicated that clearly to the other groups involved.
Got it. Okay. And just in terms of, when are you anticipating you think you'll get a financial commitment from Rabdan? Is that sort of a end of Q1 calendar year next year, so March, or is it later than that?
Yeah, I mean, recognizing, and Phil, you've gotten to know me, that I'm perpetually restless and discontent, and everything I tend to approach with a sense of urgency. And this has moved very, very quickly by Middle East standards, and anyone who's dealt with the Middle East could probably echo that. And the timeline we've outlined to them, they recognize in their minds is a very aggressive timeline. Nonetheless, we've asserted it's the timeline that we must live by. And so, yes, Q1 is when I would hope and would expect that we would have binding direction on the $300 million project.
Excellent. Okay. Thanks a lot.
Thanks again for all your support and help, Phil.
No problem. Thanks, Hank.
Okay. Thanks, Hank. A few questions have come through the Q&A function, Hank. First one submitted is from Finola Burke of RAS. She would like to know if you could give a sense of the production capability of 4 atomizers, and does this give production of around 600 tonnes per annum?
Yes. So hello, Finola, and thank you for dialing in. So if the way to look at it on the titanium side, and I'm going to be a little bit general because we haven't yet disclosed this, and I want to come back with a very, very thorough financial model. But let me comment on what's been said by Amaero in the past. Number one, I do not think that the titanium atomizers revenue will be as high as Amaero had suggested before. Amaero had indicated initially $30 million Australian per titanium atomizer. They later increased that guidance to $40 million. I am more conservative. I'm assuming 1 ingot an hour can be processed, 30 kilograms per ingot. I'm assuming 25% downtime. It gets you probably to something closer. It gets you to a bit less than 30 million. So I'm not as optimistic as the early guidance had been on the dollars. On the amount of powder, the way I think about it is heretofore grade 5 aerospace grade has been where the real focus was. And the benefit of this inert gas atomization technology is we're getting a higher yield of grade 5. A lot of the participants in the market today are getting 25 or 30% yield of grade 5. On a small batch basis, we've been getting closer to 60%. I think on a commercial basis, we'll get about 50%. So a material increase in grade 5 high value powder. Also, of course, we're seeing applications develop that use other, what would be out of spec from an aerospace standpoint. such as our friends at Titomic and Cold Spray, and we will work with other applications there. So I think on a per atomizer basis, we'll end up at about 200 tons per year. So closer to, I'm sorry, per atomizer, I'm sorry, about 100 tons per year, about 50 tons of aerospace grade is where I think we'll end up. And I think that the gross revenue per atomizer is going to be closer to $30 million, maybe even a bit less than that. If you look at the margins in the industry, and this is available via the public competitors, you see gross margins in the order of 60%, and you see net margins in the order of 20%. Our net margins should be a bit better given our yield, as well as our gross margins actually. But I think that 60 and 20 is a fair place to assume for modeling purposes. And the other thing I would add is, if you look at capital equipment such as this, take the atomizers first and then AM, this is long-lived equipment, but you would still expect a payback period on the order of 4 to 5 years. Many would consider that long. They would look for less than 4 years. If you've got a 20% net margin, that means your revenue at stabilization needs to be 100 to 25 to 150% of your capital cost. It's another way to think of it. On the AM equipment side, this is 3D printing. You've got a shorter life asset. So you probably need a payback period. Some might say 2 years. Even if you look at 3 years to be conservative, obviously that's going to be, more like 165% of annual revenue to cost. So the revenues will be significant on a $300 million investment base. You're talking about stabilized revenues. Again, we will come out with the essential numbers, but based on that payback period, you would deduce that the annual revenues would be significantly above $300 million.
Thanks, Hank. All right, the next question is from Paul Ballester, and Paul asks, where do you plan on getting your raw titanium feedstock for the atomizers?
Hello, Paul. These are great questions. I mean, that is the challenge right now in the industry. As I mentioned earlier, if you look at where most of the raw material is coming, the minerals, be it the rutile, ilmenite, and so forth, Russia, Ukraine, Australia, sands in Saudi Arabia. The U.S. right now is actively looking at financing projects in Ukraine, as an example. Toho, the Japanese company, has stood up a large consortium of titanium sponge in Saudi Arabia. So the question will be the application. Certainly defense and some aerospace applications will require allied sourced, and that would have to come outside of Russia for sure, and in some cases outside of China. And so now you're looking at some of these other places I mentioned. There's not that much supply in the world today. That is why this vertical integration of the titanium supply is such an interesting opportunity for us, and why we have so much interest on that as well. That will be the next project we turn to. I think there's a good chance we will have that project green lighted by the end of calendar year 23. But initially, there's a company, United Precision Metals. It's one of the largest metal distributors in the world. And we're working closely with UPM, both on an offtake agreement for our titanium powder, but also for feedstock. And that feedstock, both in allied sourced, of which again, it's somewhat limited, as well as non-Russia sourced feedstock. So more to come on that, but it really underscores the opportunity in the vertical integration. Good question, Paul.
Thanks, Hank. Another question on feedstock supply from Terry Callahan. In addition to what you've just mentioned, Hank, what other countries supply TI feedstock? That's
predominantly it. I mean, the last numbers I saw, I happened to be in Utah seeing my wife's family for the holidays. And to my knowledge, the last numbers I saw, the only active production in the U.S. is a small mining operation outside of Salt Lake City, which I believe is 0.5% of global production. So the U.S. has very little production to speak of. Russia, China, the sands, again, Saudi is an area, and the Kingdom of Saudi Arabia also has a very aggressive national industrialization agenda. And that is very likely a place that we would look at standing up. tie sponge, as well as potentially a melt facility. Ukraine, as I mentioned, obviously having challenges right now from a reliability standpoint, but strong on the mineral side. But Russia has really dominated the global supply chain to date. Australia is another great possibility for us. You know, one of the real opportunities we see for Australia long-term with Amaero is twofold. A number of the aerospace and defense contractors have significant in-country content requirements, given their counter trade arrangements with Australia. So over time, something would very much like to stand up in Australia. And of course, the other is the mining opportunity. And whether it's that we directly look at operating a mining operation and or sign with a strategic partner a long-term offtake to control the mineral, we would look at one of those two as part of our integration strategy.
Okay, thanks, Hank. Couple of questions from attendee Zitong Lee. Zitong asks, wants to know about the other 3D printing projects, such as the tooling project. Are they still continuing? And also, when do you expect Amaero will become cash flow positive?
Yep. So first, I would say we announced, and I want to, Gabby can correct me on this, I want to say it was August, but we announced the company would not be cash flow positive in calendar 23, as the company had earlier announced. And this was announced at the same time that we canceled the Australian project, given the delays and the fact that we felt it was poorly suited for what we're doing going forward. So that has delayed the profitability of the company. We've not provided a date of when we would be break-even profitable. But I would say that it is highly unlikely calendar year 23 or calendar year 24, we would be cash flow positive, given the large nature of the project and the cost that we'll have front end to staff these projects and to load. At the very same time, keep in mind that we will move half of that expense to our joint venture partner in the 50-50 contribution of working capital. So I don't think it will be a number that's not manageable from Amaero's perspective. Again, I do not expect we'll have to have a significantly dilutive capital raise, which is the positive, but I also want to be clear that we will not be cash flow positive for some period of time. The other question relating to projects, we also recently announced that the second phase, if you will, of our strategic review that myself and the board are in the midst of now is we're reviewing every commercial project. So this would include the Gilmores, the Boeings, the Fletcher/Owen Cornings, go down the list. And each of those projects, we're looking at what is the scope of work, what is the end commercial opportunity, what is the strategic relationship with the OEM or the first tier prime, what were the milestones and to what extent have those deliverables been achieved, what was the budget, what's realistically the budget today, and then we will make a decision on whether we cancel or continue with each of those projects. I announced earlier, we do not expect that there is any material revenue from the projects that were prior announced in the imminent future. Again, I do not expect there's imminent revenue of consequence from those projects prior announced in the imminent future. A couple of them are large opportunities, and they may well have significant revenue attached to them over time, but we want to be very careful we manage those expectations and reset, if you will, the expectations. Ziton, hopefully that's helpful.
Thank you, Hank. Okay, a couple of questions from a gentleman by the name of Sam Harris. Sam asks, what are the expectations on the price of titanium powder? And could you illuminate why you chose to allocate 3 machines to aluminium, copper and super alloys? I'll start off with those. He's got a couple of other ones as well, Hank, but let's do those ones first. Yeah, Sam, as you know, I mean, we're at that inflection point from an adoption standpoint, and where you've seen industry invest is industry has invested further down the supply chain. It's invested. We need more sponge. We've got some such. It's invested in melt. There has yet to be significant investment in powder metallurgy, and obviously from a 3D printing standpoint, we're at somewhat maturity for composites, we're at somewhat maturity for polymers. We're very immature as it relates to the metals.
We have had conversations with an offtake agreement. I'm not disclosed or at liberty to disclose, given NDA, where we've actually signed an MOU, the indicative price in that offtake agreement. But I think if you look at spot price today, our assumption is that given the supply demand imbalance, and particularly in allied countries, we would expect that spot price would be durable, if not trend up higher over time. And based on that spot price, what we would plan to do is probably sign in the order of 50%, 40 to 50% via forward offtake agreement, and keep the remaining for spot, both direct relationships with OEMs and first times, as well as smaller batch orders. As it relates to why would we stand up metallurgy powder for the other alloy families, one of the things that I mentioned, and this is of significant consequence to UAE and to Saudi. In fact, there's been recent statements to the such. Given the fact these countries have stuck out a claim to be geopolitically neutral, defense applications are significant applications for metal 3D printing. At the very same time, there are other very significant applications for advanced metallurgy, advanced material science, where we will focus a lot of intellect, as well as powder production. Emirates Global Aluminum is the largest aluminum producer in the world. And we think there is a strategic opportunity to partner with them and do a number of things on the aluminum side. You could imagine from a feedstock standpoint, from a recycling standpoint, and from a collaboration with their end clients, automobile industry and other things, we think there's an opportunity there with aluminum. On copper, obviously copper had significant industrial uses in the past. It's got significant applications for electric vehicles today. We actually think the most exciting thing for copper alloys going forward is space exploration. Given the heat properties required in space exploration, I think there's a lot of interesting things that can be done on the copper alloy side. We've already begun some of that work and we'll continue it. And UAE has a very ambitious space program that we would expect we will partner with. And finally, on the super alloys, given the applications in oil and gas down the hole, given the allocations in desalination, as well as other industrial applications, we think there's a lot of opportunities in the region, as well as globally for these other alloy families. Hopefully that's helpful.
Thanks, Hank. Sam also asked, you've paraphrased some of this answer to this question, but he asked, who do you anticipate being your end customers, and will the products need to be qualified prior to sales and revenue? Yeah, so for those that aren't on the call, I mean, this too is a really insightful question. Let me provide a little bit of background to the question. And it's an area that, you know, we as a company have to do better. I think that if you look at some of the earlier expectation, for example, to the question of when will we be break even, I think some participants in the industry, as well as Amaero prior to, have based some projections on what's likely a very, very optimistic qualification period. So beginning with a powder that would be sold to aerospace and/or defense. So buyers such as Raytheon, Lockheed Martin, Boeing, and such, as it's intimated, they will require not only certification of your facility, but qualification of your powder. That qualification of the powder, I'm assuming, will take up to 2 years. And I don't think that's an overly conservative assumption. And part of the benefits of bringing on the offset programs, working with Tawazun, and we have offsets who are already very interested, is not only having their capital that satisfies their offset liabilities and obligations in country, but to have a strategic relationship to work with them to try to expedite the qualification of the powder. So for those applications, aerospace and defense in particular, absolutely the powder will have to be qualified. And our assumption is that the revenue from that is years away. And thus the reason that we're more conservative about how long it will take us to be break even. There will be other applications that will not require qualification, from medical applications to industrial applications, but certainly on the aerospace and the defense side, we will expect to have to qualify that powder, and we do expect that's going to be a lengthy process. Okay, thanks, Hank. The next question is from Thomas Showmaker, and Thomas asks, can you please expand on the IP or expertise that Amero is bringing to the partnership, given that the company's original IP was in machine development, which has been discontinued? Is the core relevant IP contained in the super alloys?
So it also is a good question. I would, I've got a bit of a different view. I don't really view the real IP, which was know-how that Amero has relating to equipment, is one of the benefits of being attached to Monash and the work that we've done with CRSRO, the work that we've done with the additive manufacturing lab, is they had numerous equipment. They had equipment from essentially every different manufacturer. And thus our team, Barry Finn and others, had experience optimizing the parameters to print on all these different machines. And so I think from an optimization standpoint, we have know-how that relates to that. And that is important intellectual property. I would not characterize that we directly had any know-how in producing that equipment. We had partnered with another company, Ampro. We have subsequently discontinued and terminated that distribution relationship. So I would not view that we had direct intellectual property or know-how relating to the equipment manufacturing. We do have significant know-how in addition to the IP that is patented. So we have patented IP both on a standalone basis as well as with partners, both Monash University as well as private industry partners. And then we have a lot of know-how. The know-how is true IP. As an example, it requires licensing to export that know-how. We had to receive an export license to export know-how for our parameter optimization of the atomizer in Europe. And so much of the know-how that we have around powder metallurgy, around process optimization, around material science is in fact export controlled and very valuable IP. And so on a going forward basis, where do I see us focusing our intellectual property? And by the way, I anticipate we'll make significant hires in this area, is we will continue to have a strong focus on powder metallurgy. Obviously, Jim Sears in the US brings a great expertise to that, and we'll build off of that expertise. We'll continue to build off expertise for process optimization, for material science, where we have developed some proprietary alloys. I expect we'll continue to work to do more of that. And then also working closely with our end customer on the applied engineering design and commercialization, where essentially it will be contract design. I don't care to be in the bureau business, which again, I think will be commoditized. I do care to be an intellectual partner with the primes and taking a part that heretofore has been another material such as aluminum and redevelop that part in another alloy such as titanium alloy and develop the part via 3D printing that heretofore might have been cast. And then likewise, develop other type materials and other type of uses that can be 3D printed. Hopefully that answers your question.
Okay, thanks, Hank. Just switching back to a couple of verbal questions now. So the first person who wants to speak is Tom Kenyon. Go ahead, Tom.
Thanks. G'day, Hank. You might have mentioned this already, so I apologise if you have, but did you say Amero is interested in getting into the sort of almost lower down the production change of titanium, the creation of sponge, or the processing titanium ores into metal in a way? Is that something that you're interested in? Absolutely, and it's something, Tom, that we've already we are well beyond exploration stage. It's in parallel with our project in the UAE. But in my mind, and I think back to other industries that have evolved to be critical industries, I want to have intellectual capital and closely be an essential trusted partner with the first tier primes and the OEMs. And then I want to be a pick and shovel provider to the underlying secular growth of the industry. And given the nature of having to relocate critical manufacturing to critical materials, I see Amero being a material company within additive manufacturing, right? We'll always be in additive manufacturing. That's our ecosystem, right? But if you look at where we'll really have IP, where we'll really diversify ourselves over time, it's going to be material science. It's going to be powder metallurgy.
And we want to continue to move down and vertically integrate that entire supply chain. Absolutely melt, absolutely machine, mill, forge. And then the next thing we would explore if that would be sponge. And then on the mining side, do we do that directly, or do we facilitate reliable source via long-term offtake agreement, to be determined? But absolutely, it's where we see the future of this business beyond this project in UAE. And thus you think about the excitement and why I'm so confident we'll be listed in the US. You go down that path not too far and we're an ASX 200 company. And I really believe that. I would not want to see a company trade in the US with a market cap under 1 billion US. And so to the extent we think we have aspirations to trade in the US, it gives you some idea of the scale and the scope of what I think we can build.
Yeah. And do you see that going out into US operations in terms of, powder production in the US, given their focus on that sovereign being onshoring these critical materials? Do you think, powder production, sponge production, all of that in the US as well?
Absolutely. So if you think about it, Tom, and this is, again, I'm an investor, right? From an operations standpoint, I'm damn good at executing and getting things done. But we're going to bring in some really qualified operators in these various areas that will drive strategy, and whether it's a specific melt strategy or specific machining mill forward strategy, or just like we've done the powder metallurgy. From a puzzle standpoint, the way I think about it is it's going to be driven by our end consumer, our end customer. So in the US, for example, we're going to have certain aerospace and defense customers that have IP that cannot leave the US. So I've got to stand up applied engineering, design, and commercialization in the US, period, right? Some of that development cannot be done outside the US. Others could be done perhaps another NATO country, not beyond that. Others could be done in the Middle East, right? But I've got to have the capability where the end customer is going to require it. Likewise, on the powder side, I think for some of these most critical applications, most top secret applications, it's going to require US sourced powder. And so I will absolutely at some point stand up metal powder capability in the US. The US already has significant machining, forging capability stood up. I don't need to replicate that. I can outsource that and do that in a closed and secure intellectual property environment. And obviously the US doesn't have the resources I need further down the supply chain. The Australia, where does it fit in? As I said, I think it's got some very interesting opportunities for us for in-country capabilities on the production side. Also, there will be some IP. Australia's done a great job in space, and there's going to be some IP that they'll want to keep in Australia from a development standpoint. And so I could absolutely see a certain amount of applied engineering, design, and commercialization done in Australia for that reason. And then more so the production where you've got in content, counter trade obligations. And then of course, mining, where we've got minerals. I would love to have a mining operation and or a long-term offtake partnership and source those materials from Australia. That was part of my interest in the very, very beginning, was tying that back into Australia. On the sponge side, look, we've got the minerals in Australia. I would love to do it. Realistically, is it feasible? Not that I see, right? I haven't seen Australia willing to step up and be competitive with the economic incentives I have elsewhere in the world. The same would be said for the US as it relates to the raw material side. So I would love to have a sponge operation in Australia. It's not going to be viable unless there's a material shift in national policy that's going to make it more conducive to do so. That would more likely be today, I would say probably in the Kingdom of Saudi Arabia, otherwise perhaps the UAE.
Yeah, thanks, Hank.
Yep. Thank you, Tom.
Okay, Hank. The next question is from Janine Kinghorn. Janine asks, will your powder production utilise the technology licensed from Monash University? And if so, do you need the approval of Monash for the project?
Thanks, Janine. So if I had John McCullough or Barry on, I would have them comment on this as well. But to my knowledge, we do not have any IP with Monash that relates to powder metallurgy. So we certainly share IP with Monash, including, for example, some patented alloys. But on the powder metallurgy side, I do not believe we have any IP that we share with Monash.
Okay.
And by the way, Janine, if I speak in error, I will make sure that Barry and or John or others correct me. And if you would just send your email address, please, to Gabby, we'll circle back to you if by chance I've misspoken, but I'm pretty sure that's the case. Thank you.
Thanks, Hank. Another question from Sam Harris. He says, what are the risks of the project being delayed due to funding not being sourced by Rabdan?
So I again, in my mind, the things I lay in bed and worry about at night, that's it, right? But I don't think it's a binary outcome. The way I'm going to look at it is if we're dealing with a bureaucracy. The great thing about the UAE, and I say this out of admiration, not out of criticism, unlike the US and Australia, where you're dealing with a large government, you're dealing with bureaucracy, and you're dealing with different fiefdoms and ownership, the UAE is better described as a really well-run family-owned business. And it truly better describes the way the country, if you will, operates. You go get a driver's license in Australia or the US versus go get a driver's license in the UAE. When I had to file for my director's ID in Australia, it was one of the more cumbersome processes I've ever been through and took, I think, about 8 weeks. Something like that could be done in Abu Dhabi in about 20 minutes. And so on one hand, you don't have the same level of bureaucracy that you would have in a more traditional, mature government. On the other hand, these are very visible projects. And, the good news is we have support from the most important industrial agencies. On the other hand, you still have to go through and get all the necessary approvals. And they're doing very, very sound due diligence, as you and I would expect they would. So I think the timeline that we've given for the first quarter is an ambitious timeline, they would tell you. At the very same time, I think it's achievable if we continue to push really, really hard. I was away from home 80 out of 90 days the last 3 months. I will likely be away from home 80 out of 90 days, beginning late January of this year. And the reason for that is it's just essential to push things along and get it done. So I'm confident we're going to get there, but there's absolutely that delay. And one thing investors should look at us is, look, particularly given the history of this company, we need to execute. And we're going to communicate in a much more transparent manner. We're going to be much more critical of ourselves where we fall short. Invariably, we will fall short. We're going to communicate that very clearly. But to my point about it being binary, as an example, if we get towards the end of January and for whatever reason we haven't seen material success, then we're going to push forward on what I'm calling this demonstration testing and training facility. So we have a place to install the atomizer. Atomizer can be on the water in 90 days to 90 to 120 days. I want that landed somewhere July 1. Okay, to land that facility July 1, I better, the good news is I can construct something over there a lot faster than I could in Australia or the US. But I better be turning dirt in the first quarter and or find a facility that I can repurpose. So there's a chance it slips. I feel good about where we are though. And I also have a plan B that is something other than the full project. And bear in mind, if we have to go build what I'm calling this demonstration testing and training facility, and let's say that it has a budget of $20 million, Rabdan's got to fund that, right? All the more reason that we've aligned incentives for them to finalize the final funding for the project, because that $20 million that we have is largely superfluous, right? We would other capture it in the $300 million, right? So it's just an incremental cost to them and or the partners, all the more reason for them to expedite the other approval and avoid an interim project. Does that answer the question, Sam? hopefully.
I'll check with him, but
Yeah, I mean, mind you, as an investor I believe today after the recent financing, we own roughly 40% of the fully paid and ordinary shares. I'm very mindful of exactly the same issues you are. Our interests are 100% aligned. I want to expedite the approval of this project. I want to move on to what are larger, more ambitious projects. I want to minimize any dilutive capital that has to be raised, and I want to get it all done as quickly as possible.
okay, thanks, Hank. I noticed Howard's got his hand up again. Please go ahead, Howard.
Thanks, Gabby. Hi again, Hank. First of all, mate, thank you for the information you've been able to give throughout this webinar. It's really been quite enlightening, especially for someone who I said to you before was a very new investor. And just came up with another question I'd like you to comment on if you can, and it is a market orientated question. So when I did first look at the company, it was only a matter of weeks ago, and the first thing I did was have a look at what Amero was doing, took note that you had come on board as a new CEO, and noted your increase in investment in the company itself, and then decided to make an investment. Shortly after that, I read about the joint venture, about 2 or 3 days after my initial investment. That was released, and there was significant movement in the market after that, both in volume and terms of price, and that has continued even to the point where, as you well know, the ASX issued a speeding ticket recently, and the company answered their questions quite rightly. And I'm wondering if you're in a position, can you give an opinion on the recent activity in the market around Amero?
So I can't, and I don't, as an investor, and a lot of what we do is private investing. In many ways, I think of Amero as a private company. On one hand, it will be important that the stock price over time reflects the a fair enterprise value for this business. At the very same time, I'm highly confident if we execute and if we build trust with our investors, it will. And thus, I don't spend a lot. I lay in bed at night worrying about a lot of things. The stock price is not one of them. As it relates to recent activity, when you file an announcement, I don't want to comment too much on ASX announcements, but obviously the nature of when you file, the ASX determines to what extent things are price sensitive, not price sensitive, when we report, et cetera. And that all we've tried to do, and I am very mindful of this, is to communicate with investors in a transparent, forthcoming, truthful, and balanced manner. And we will continue to do so. I think the nature of a small company like this, and we're a very small company, is the information is disseminated in a fairly inefficient manner. And so I would surmise as an investor, probably what we've seen in recent days is the digesting of the JV agreement that was announced a week plus ago. But beyond that, I really, others that sit on a trading desk that would be far better suited than me to comment on that. As we did disclose in the ASX follow-up announcement yesterday, we're unaware of any material information that's not currently in the marketplace.
Thanks very much, Hank. I appreciate that.
Thank you.
Okay, Hank. I'm cognizant that we're 1/4 the hour already, but another question from Finola. Finola asks if you could give a sense of the timing of getting Falcon TI in production once you have the funding green light, i.e. how long a lead time do you need for the gas atomizers and the production facility to be built?
Yeah, so again, a great question, and this is going to be considerably more conservative than earlier guidance before we changed the guidance in August. So if you step forward in a timeline, if we could begin installation of the atomizer on July 1, We've already done, essentially, we've completed hot and cold testing in Europe, which has enabled us to do a fair amount of process optimization. Notwithstanding that, it will take at least 90 days, maybe longer, once the equipment is installed, to do more testing and training and so forth on the equipment. 90 days, best case scenario, I would say maybe as much as 6 months. So now you're in the end of third quarter, end of fourth quarter calendar year. You'll then need 3 to 6 months to certify the facility. Okay, so now you're early next year, mid next year. And then, as I mentioned earlier, for the grade 5 aerospace powder that will be used in the aerospace and defense industry, you'll then need that to be qualified. And I'm assuming 2 years for that to be qualified. So if you think about an installation July of this year, I think you're 3 years away from having stabilized revenue. So having full run, high value revenue, I think, is 3 years from installation date. Thus, the reason I provided a considerably more conservative period to achieve break even than before. On the subsequent tie atomizers, we've probably got some economies. We can train on the existing atomizer, and we've built that into our staffing plan. And likewise, the certifying and the qualifying, it will still be a lengthy process. But one would hope you've got some economies in there that it's a bit more efficient, if you will, than before. As it relates to the other alloys, I think it's much like the first titanium. I think you're going to be 3 years away. And on that equipment, you're probably looking at 16 months. So we've got a very bottoms up, detailed financial model that has been built. And as this project is green lighted, we'll be coming to the market and sharing that. But I think I've given some pretty good insight today on what we look at the long run stabilized revenue. And the way I would expect investors would price the business is once we have a green lighted deal and we have firm commitment on the funding, then you think about how much of that will convey to our tangible book value. And one would think that the enterprise value would you'd get some type of floor enterprise value off of that. And then over time, as you approach bringing the facilities online and stabilizing revenue, you're going to trade up to some type of multiple on EBITDA, multiple on revenue, and that's going to be materially higher than your book value. So we'll provide more guidance on that going forward, but that's what I would say at this point. But we are being quite deliberate and quite conservative on how we expect to onboard the equipment and to achieve full qualification. And by the way, Gabby, I know we're past time. Others can feel free to fall off. I'll stay as long as we have questions.
Sure. Okay. On that note, Hank, if anyone has any more questions, either submit it via the Q&A function or raise your hand, please. I'll just wait. Okay. We have one from Miriam Lee. Miriam, please unmute yourself and go ahead. No?
Hello, Miriam.
No. Don't think she's probably having audio issues or something.
Okay.
Miriam, if you submit your question to myself or Hank, the email addresses on the ASX announcements. That looks like there's all of the questions, Hank. So I'll pass to you for closing comments.
Yeah, thank you, Gabby. And I know we're in the midst of the holidays, and I very much appreciate people taking the time to join us, and very, very much appreciate your trust and confidence. Amaero is your company. I'm a fellow shareholder, and myself and Amaero's board and our key leadership are going to do all that we can do to earn your trust, to instill your confidence. I'm very excited about this opportunity. I think the first quarter of next year, calendar year, is going to be a very transformative quarter. I think calendar year 2023 is going to be a very transformative year for this business. We will continue to communicate, as I mentioned, in a very transparent, candid manner. And as many of you know, because you've reached out, I tend to be on email 24/7. I tend to respond pretty quickly. So always available to the extent one has a question or cares to dialogue. With that, Merry Christmas, Happy Hanukkah. Hope everyone has a wonderful year and hope to see many of you in January in Australia. Thank you, Gabby.
Thanks, Hank.
Take care.